we will make money only when our borrowers are going to make money. So that's where some of the lenders have started moving towards a more downstream servicing model as well. They make sure that there are certain tools, or they do whatever it's in their power to make sure that a student has an easier time to finding that success that they came for.
International students face mounting challenges as U.S. policies shift and financial barriers persist, yet innovative funding solutions continue to emerge. I'm joined by Arbaaz Hashmi to unpack the complex world of international student financing and share his vision for the future of cross-border educational investment. Arbaaz is Director of Business Development at Sallie Mae and former team member at Empower Financing, and brings critical insights from both traditional and innovative lending perspectives. Arbaaz, so glad to have you on the podcast.
Good to be here, Ray. Thank you so much for having me here.
It's a pleasure. Jumping right in, based on your experience at both Sallie Mae and Empower Financing, how has the landscape for student financing evolved over the past 5 to 10 years? What major shifts have you observed in how international students fund their U.S. education?
So I have been in this industry for about 9 years now, specifically talking about the international student financing industry. And I've definitely seen a lot many developments happening, but a better way of looking at those developments would be to think about in terms of what used to happen 10 years back, and then what used to happen 5 years back, and how we are moving towards a more better way of lending for international students. 10 years back, if you think about funding options, were more secured funding options. Like anybody who would want to get a loan, a lot of international degrees were funded by loans that were structured around a collateral and a cosigner, right? 5 years back, if you were noticing and you were following that trend, you would notice that a lot of those international degrees started getting funded just with a cosigner, without a collateral. That was definitely one of the developments that happened in the industry, that collateral was not a necessary security item to actually fund that education. Cosigners definitely were an important part. And now, in the last a few years, you'll see a lot many lenders are offering loans without a cosigner as well, because now they are moving towards, they have enough information, enough data, enough behavioral trends to be able to predict how the student would behave. Will this be a successful student? Will the student need support? And that's why they are slightly more confident in funding for these international educations without a cosigner. Now, that doesn't mean that there are different lenders. There are lenders who used to fund with the collateral and a cosigner and have moved to a trend where they can only fund with a cosigner. Or there have been, lenders who were funding with a cosigner, and now they have moved to a state where they can offer loans to certain degrees without even a cosigner. It's limited, but the idea here is that they are moving towards a slightly more student-focused underwriting process rather than a family-focused. Because if you think about collateral, cosigner, for any student who is in the age range of 18 or 25, chances are that they do not own a collateral to be able to put up for a loan. And the idea here is for a cosigner to be included, it cannot be the borrower. It needs to be somebody who is earning. So it needs somebody from the family who needs to offer their support for the loan application. And that's exactly why it's important, because what happens now is the market grows. Not every student, if you talk about from a global perspective, has a sizable collateral or a worthy cosigner to be able to get that education. And definitely markets have behaved differently. If you talk about India as a market, it has slightly more evolved compared to, let's say, a country like Bangladesh today in terms of student lending, or some countries in Africa where the student is entirely dependent either on getting that full scholarship from the school or maybe get a part-time job at the school, which is not true for all grad students. Like you apply, and if you get it, it's good. If not, you still have to manage the costs and expenses that you agreed for, right? That is definitely heartening to see that lenders are becoming a slightly more student-focused. They are becoming more borrower-friendly. But I would also go as far as to say that lenders are also realizing that we will make money only when our borrowers are going to make money. So that's where some of the lenders have started moving towards a more downstream servicing model as well, where all of the borrowers who come to them and are part of their community, they make sure that there are certain tools, or they do whatever it's in their power to make sure that a student has an easier time to finding that success that they came for.
That's fascinating. And that return on investment has been the trigger for many international students. I mean, consider India, for example, as a market. One of the major drivers of enrollment from India is the availability of work visas in the United States so that they can repay any financing. And for that matter, when they obtain a student visa on a Form I-20 to get their F1 or J1 visa, they are obligated to show their ability to finance their degree. And that can become very murky. And for a long time, I think institutions had not really taken responsibility for that. They sort of said, well, it's up to you. You figure out how to do this. And it's fascinating when they tout their return on investment that they're not willing to take that risk versus a financial institution which can model that risk and go, no, this is a surefire bet. This student's going to obtain return on investment from their degree at Duke or NYU or Arizona State University. So that is a great way to fund their education. So I'm curious to kind of dig into that from your perspective. What types of partnerships between universities, financial institutions, other organizations are proving most effective in creating sustainable funding solutions for international students?
I would first talk a little bit about, you mentioned that universities have historically been shying away from being the part of this process. And I've also realized that also comes with a reason, because historically there have been issues and a slightly bit more scrutiny for any university who is associating with a student lender. Just so that make sure that, okay, you know what, keep your slate clean. The students will figure out their funding options. We don't want to get into any official, conversation or any official association with any student lender, right? And that has definitely been the case. In fact, that is something that we have seen too. Universities would be open to having a conversation, but if it talks about anything in terms of, well, can you recommend a product to a student? Nope, definitely not. We will make sure the student has plenty of options, which works well because that creates a good opportunity for a lot of organizations to come into this and ensure that there is a better experience for students, right? Now, when I talk about universities, financial institutions, other organizations, I could see there's a lot of cross-pollination happening across these organizations. And the way here is to figure out a win-win situation. If you talk about universities, one of the absolute mandates for them is the number of enrollments today, right? There is a funnel that they follow from the first point of contact to exactly the student has arrived in my university and has enrolled for classes. And that is exactly how they keep tracking out the funnel. Well, how are we converting at each stage? There is definitely a sizable drop off for a lot of these universities at the stage where the student might be interested and have received admit, but at the time of offering the funding options, they realize the student is not able to procure the right amount of funds or is not able to showcase his eligibility to be able to support himself while they are in the US. And that's where it's not a very amazing scene for the university, because they have invested the last 12 months into getting that student through the application, through the admit, and now all of a sudden, it's not even something that's in their hand to be able to help the student out with. Yes, they can offer some scholarship, but that's also limited opportunity, especially for a private university we're talking about, right? And that's exactly where the lenders, the organizations come into play. There are certain collaborations that are happening between universities and lenders as well today, wherein there is no monetary exchange, but it's more of a win-win situation to a point where, you know what, at around April and May, a university is thinking about making sure that all of the students who have received admit should be able to at least get to the stage where they are getting a visa and they are about to come to my university. But since funding is a big obstacle in this process, they definitely make room for, let's say, 3-4 lenders to come in and talk about very specific offering. So it could be, let's assume, a University of Tennessee, right? And they have a grad program. Today, they would have invite 3-4 lenders to talk specifically about how an international student could get funding for 3 programs that they are offering. These sessions are tailored specifically to the admitted students so that they have a good time and an easier time to figure out the right funding options for them. The university just wants to ensure that they are not favoring any lender over another. And that's why the whole idea of to get 3-4 lenders into play. And I would even say that these collaborations are happening even at an earlier stages. So when the students are in their thinking about studying stage, or when the students are in their applying stage, and they're still making it a conscious decision, well, should I invest $150 of an application fee for this university or not? Is it a good investment for me or not? That is where universities are ensuring that the student knows that, hey, if you receive an admit, there is a funding option available for you. And that's where a lot of these lenders are coming into play. A lot of these financial marketplaces are coming into play. So where lenders at times, because for a lender, if you think about it, they understand the student journey, but it's more optimal for them to find the student at the right time, which means that they have received an admit and they're looking for funding. And that's a very seriously long engagement, right? And that's why a lot of these lenders prefer to work with financial marketplaces, universities, because they help them get in front of the students at the right time.
That's evolved a lot over the
You're right.
last couple of years, and I can imagine. I mean, of course, looking at preferred lenders and some of the scandals that happen around the idea of having preferred lenders for institutions, I think in the last 30 years we've seen some real changes there from a regulatory or certainly a caution perspective on the part of institutions. I was most familiar with international student lending when working at institutions that were STEM institutions. And there was
Right.
a sort of built in guaranteed return on investment that if I were looking at a model, if I were using technology to model whether or not this was a good bet for my financial institution to put a loan to give financing to this student, it was an obvious yes, because this is one of the highest earning degrees with incredible upward mobility potential and lifetime earning and all those good things. But I'm curious, we've come a long way. How has technology transformed this process? Are there particular innovations you could point to in underwriting or the approval process or loan management that have really been able to accelerate this and been maybe game changers for international students?
To be honest, technology is supposed to be one of the biggest asset within this process, because if you think about it, an international student audience is very decentralized, right? Globally, there are certain number of students that are in India, certain number of students that you want who are in Africa, similarly in LATAM. And technology is that one unification point that will get everybody the right service or everybody get to the same service, right? So technology is going to be a big part of this. In fact, it is involved in both, and you talked about underwriting specifically, but it's also involved a lot in GTM, a go-to-market strategies for these lenders as well. But talking specifically about, let's say, underwriting process when it comes to technology, there are innovations today wherein companies are able to access home country credit history as well of these international students and are able to make a much more informed decision. Now, it goes both ways, right? So for a student who would, let's say, applying to a US university and is going for a US lender, if they have a decent credit file back in their home country, some lenders are able to access that and are able to say, yes, this student has been a good borrower their entire life, and it makes sense to actually offer them a better interest rate. So for a lot of these lenders who offer a range specific interest rates that, hey, anytime anywhere between 9% to 14%, a student who is able to leverage their home country credit history would get slightly on the lower end of this range instead of getting a 14% or a 13% interest rate. So definitely those things are helping out. There are a lot more organizations that are coming together to offer other kinds of services too. Because it's when you talk about a need for a loan, it's not just at the beginning of an education. A lot of times students are not able to figure out the right funding options, especially for those countries who do not have a more evolved student lending market, right? So if we talk about Pakistan or some African countries, a lot of LATAM countries, student loan is not a very common product that they can avail from their from their banking industry. And that's why what they do is for the first year of education, especially if we talk about the US education specifically, what we need to show in terms as a proof of fund is the I-20 amount at the end of the day. Everyone would like to have enough funds for their entire education. That goes without saying, but that's not always the case for a lot of the students in different countries. And that's why they try to make sure that they have enough funds for the first year of education, which could be 9 months of funds or 12 months of funds, depending upon the I-20 amount. They borrow it either, or they make sure that they avail their savings and to use that for their education. But once they reach US, the idea is always either to get a part-time job or to get more funds or to get another loan, right? And that is where these options, these home country credit options would actually come into play, because they already had a credit history. Now they're already in the US. They are looking for a loan to actually supplement their education. This is where it would be one of the best experiences that they could have, because they don't really have to worry about these things. At the same time, there are other organizations that are coming here which are offering banking services to international students that are tailor-made for banking services. So what happens here is that the student comes in the first year of their education, they avail that service, they get a bank account, they get a credit card from that country or from that company. They make sure that they use it wisely for the first year, and they develop some sort of a thin credit file. Now, when the second year, when they actually go to a lender to get a student loan, what happens is they have a very thin file in the US, but they still have a thin file in the US, and they already have a home country credit history. So coupling them both actually presents them in a good position, in a good situation to get that loan.
And that's interesting because that is not a common knowledge right now. That is a new trend in the last couple of years where international students can obtain a U.S. bank account, a credit card, with greater ease than I think 10 years ago when I had students arriving at JFK International Airport in New York to come to NYU with a few dollars in their pocket, maybe, and real uncertainty about being able to afford basic needs because they couldn't get work authorization without something on campus. They couldn't get a bank account. They couldn't get all of these things that now set them up for success. So, I mean, those were real limitations on international student mobility. And frankly, we're in an environment right now where we're seeing policy shifts that will continue to limit international student mobility, greater scrutiny on the visa process, for example. So just curious to back up and kind of the broad view. What are you observing in real time, the impact on financing options and student behavior? How are financial institutions responding to what is going on in this administration regarding international students?
Before I answer what are financial institutions thinking about it, let's start how are students thinking about it, right? And that kind of feeds into the behavior of financial institutions as well. Let's say we talked a little bit about, your experience working with international students, specifically in STEM, right? The idea here is that international students do think about the ROI a lot more maybe than a domestic student, because it involves a sizable contribution. It involves a lot of investment in terms of time and effort. And plus, you don't even talk about the emotional turmoil of leaving your family and moving to a different country.
Of course.
So that goes, that kind of really envelops them into that whole decision-making process. And that's why right now what I've seen is people are taking a step back and thinking, are there enough jobs in the US? And the kind of conversation has also changed. So I have been an alumnus of Hopkins for some time now. And I have definitely received a lot of questions on LinkedIn for prospective students in the last 4 years or so, since I've been a student as well, about the perspectives of the university, the career option the student have gone, or rather more towards the educational experience. How are the professors? What is the normal pedagogy of the university? How do they teach in the business school? Now, in the last 1.5 years, I've seen the conversations have primarily moved towards career outcomes. How hard it is to find a job. How did you find one? What are some of the tips that you can offer me? Would I be, and these are questions that are happening, that are coming from students even 12 months before they even start the class. They are in that decision-making process of applying to schools or not, or thinking about studying, and they are asking these questions to the alumni of their target schools. Is it worth coming into the US, or should I hold off? Because US is, both fortunately and unfortunately has most opportunities, but also is the most expensive investment that you would take in a study abroad program, right? Compared to maybe some of the other destinations where you could figure out a good international education in only half the cost. US comes with its own advantages and disadvantages, both in terms of opportunities and in terms of the challenges that come with it. I would say that the timeline has delayed a little bit because students are ensuring that they ask all of the right questions before they make that move of applying. So what has happened with financial institutions is they are in their peak. For if we talk about international student lenders, their peak usually started sometime around February, that you would see, which is the time when you would start receiving admits. There are some lenders who can lend, who can give you a provisional approval even without an admit, based on your GRE score, based on your co-applicant, cosigner, details, but they would still require an admit to come into play. So for a lot of them, let's assume the peak starts in February and goes up until May or June, because that is kind of a threshold when they can't really look for a funding because they have to get for a visa as well. So that is how the peak normally looks like for students who are in their home countries. But with the current shift, with the current policy changes, the peak has shortened a bit, definitely. Less students are thinking about going to the US. So there's definitely a bit of a decline here. But also, students are applying to later rounds now. What we used to see that, okay, so the student, maybe most of the international students would finish their applications by January of the same year when they wanted to apply. Now they might be going towards March as well, because they're still not sure if I want to apply or not. Or for that particular, even if they have received an admit, do I want to deposit or not? Should I make a point of, ensuring that I have all the information about the school before I make that $2,000 deposit or whatever that amount is. So most of the time what happens is student applies for a particular school, a particular degree with a lender, right? That I'm applying for degree A at school X. So help me figure out my options for this particular configuration. Now, if they aren't sure about what program and what university, they will delay that decision of going to a lender and asking for that funding too. What happens here is that the lenders, what they need to do is they need to help students take up, or rather help students take up a more better approach in taking that decision. So for example, lenders could definitely start, lenders who have some sort of an outcome data, lenders who are cognizant of collecting that outcome data because it's important in feeding their underwriting process, they could start talking about more ROI-driven decisions. Well, you know what? If you want to think about ROI in terms of your university options, well, here's a list of top 10 universities which are very good in ROI in the US. Here's a list of top 50 universities where you can actually get a starting salary of this much after graduating from a grad program. These are some of the analysis that lenders start to do and make sure that this is available for students to make that decision. They don't really need to offer it as the source of truth, but it definitely helps anyone to get into that decision-making strategy. I was definitely confused when I was making that call. Will I be able to get this much amount of salary? Because this is how I was thinking. Well, my loan is X amount. My salary, can it be this much? Only then I'll be able to repay this loan. That is why it leads to, students are definitely thinking slightly more ahead, 3 steps, 4 steps ahead, and lenders need to keep up on that.
To summarize, we're in an incredibly volatile time for American higher education where we're seeing funding cuts. We're seeing challenges to campus policies.
Yep.
We're seeing fluctuations in the destinations of choice for international students, as you just pointed out. Using your crystal ball from your vantage point, what trends do you anticipate in the next 3 to 5 years in international student financing? I mean, there's so many changes right now to immigration policies, global economic conditions, higher education models. What do you think the future holds? Use your crystal ball.
In my opinion, and I have been discussing it across in my network as well. In fact, just last week, I had a discussion with some of my friends who are in this sector. And the question was, like, if you think about a destination theme, what are these certain other areas, other places that are coming up, are rising up, and students should be thinking about? So there are 2 main ones that came up. First is an ideology shift. I feel that going forward, today, the student population is divided into 2 parts. One is a more education focused, a more degree focused, a more return on investment focused, that I would choose a school based on a certain return on investment because I want to lead a life that looks like that. Second is the students who are coming here for a migration intent, that eventually I want to settle in this country. Now, that doesn't mean that they lie on the application, but eventually that is their goal. So their decision-making process is slightly different. For example, I would say that one of my classmates who graduated with me, he took up a role within the same university because the role was H-1B exempted. So he didn't really have to go through that same process that I am going through to get an H-1B as well. But my intent was different. My intent was more towards an ROI from an education. So I'm happy of doing any of those things. Definitely granted that he might be, let's say, earning 80% less than me, but his long-term goal is very different than mine. And that's why he's totally happy in doing that. I feel in the next 3, 4, 5 years, and given every popular destination today is tightening up their immigration policies, the student pool would filter out with the ones who are focusing more on an ROI rather than a migration. That will definitely happen. It will discourage some of the students who eventually wanted to go for a migration-focused journey for that education. And second, I feel there are certain other destinations that are coming up in Europe, maybe in Asia as well. And that might be another way for a lot of these today popular sources of international students. If you talk about India, Southeast Asia, a lot of West Africa, LATAM, they might be analyzing and assessing these other destinations, destination countries like Estonia, Luxembourg. These are Belgium. These are not popular destinations, but are friendly towards migration-focused individuals as well. So a lot of that pool would go into these upcoming destinations. And I think with the one that have already been here for a lot of years, a lot of time, USA, UK, Canada, Australia, New Zealand, I think they would attract a lot more ROI driven. And I think there would be some more relaxation towards that for students, because I know New Zealand has a very tight restrictions when it comes to financing. Australia has similar restrictions as well. US is slightly more open towards it because there's so many lenders who are available to do it. But I feel when it comes towards a more ROI driven education, these immigration policies would also loosen up to make sure that more lenders are able to make their way, because they understand that even if they come to the country, migrating is very difficult. You won't be able to stay here for like permanently. You would be eventually have to go back. So it's always good for a temporary work permit, and we are happy to have you here, but not for a long time.
It's fascinating, and it'll have a huge impact on universities in the United States, given the total economic impact and enrollment of international students. And time will tell. Arbaaz Hashmi, Director of Business Development at Sallie Mae, thank you so much for spending time with us.
It's been really great, Ray. Thank you so much for the conversation. I enjoyed it. Happy to share some of my thoughts and insights.
So here's my take. The conversation with Arbaaz highlights how the financing landscape for international students continues to evolve, despite some policy headwinds. What stands out most for me is how financial institutions are funding creative pathways to support global talent, even as a regulatory environment is fluctuating and tightening. The intersection of technology, alternative credit assessment, cross-border financing seems to be opening doors that traditional banking never could. For institutions serious about international recruitment, leveraging and understanding these emerging financial models isn't optional, it's essential. As we see policies continue to fluctuate, these innovative funding approaches may ultimately determine which universities maintain their global competitiveness in attracting the world's brightest minds.